Advocate Niyati. Good evening, friends. I'm Advocate Niyati Mankar, Chairperson of the Student Committee of the Chamber of Tax Consultants. A warm welcome to all of you for our today's session on income tax returns, AIS, TIS, do's and don'ts. Friends, filing of income tax returns is often seen as a cumbersome process by majority of people. And because of this reason why many decide to skip filing and hire professionals, especially chartered accountants. Sometimes people don't even file and then they end up facing serious consequences. Considering its significance and serious consequences, return filing work is given to professionals, particularly chartered accountants. However, as a responsible citizen, you need to make sure that you file your returns every year. It's not only your statutory duty, but also a moral duty. Being a mandatory and statutory requirement is also a very useful legal document as it's a proof of your income. You need to show it if you want to obtain loans or you want to apply for visa. Because of this reason, it's a very important document. Even otherwise, like non-filing of IT returns or filing false returns, it entails serious consequences like penalties, prosecutions, etc. Keeping these significances and consequences in mind and to ensure that students who are the future professionals of our country are well versed in filing returns, we have organized today's session. Friends, please note that in today's session, we'll only be covering the practical aspect of filing returns and not the legal provisions. Only the practical aspects will be discussed. With that, I call upon Charmi Esha, the convener of the student committee, to introduce our today's eminent speaker.
Thank you, Niyati. Avinash Rawani sir has his firm name under Rawani and Company since 1993 in the field direct tax, audits, and company law matters. He is a member of various study circle and study group of WIRC of ICAI, and he has delivered lectures in WIRC, SIRC, BCA, CTC, and other corporate forums and organizations. He is a visiting faculty for corporate houses and IIMs, contributed various articles in various studies and groups and websites, including ICI journals. He is a core team member of ICI in handling e-filing help desk on issues of uploading filing on various e-tax audit reports and EIT returns mandated under provisions of income tax. He is also a special invitee member of DT committee of ICI for the year 2018 and study group member of committee since 2019. He has given contribution to various publications as a member of study group of corporate law and governance committee of ICI, co-authored the book on fringe benefit tax published at Malad Chamber of Tax Consultant, and also contributed to recent publication of CLG of ICI to the book on technical guide on easy incorporation of company. With this brief introduction, I request Rawani sir to take over the session. Sir, you are on mute.
Thank you, Charmi. Thank you, Niyati, Vitan, and all the committee members at the chamber for giving me this opportunity to address the students at the chamber. And today's meeting basically about the ITRs. I think last year also we had this meeting about the income tax returns, especially this ITR season. Now only I think 12 days are remaining to file the ITRs. So let us discuss about the income tax returns, how to file it and what to do, what not to do, and all what precautions has to be taken and how to do it in a limited time which is available. And let us discuss about the practical issues and about the website issues which may crop up in the last days. We'll be focusing basically on that, and some basic rough ideas. Let us also touch upon the provisions of the Income Tax Act, that to brush up some knowledge, because that will also be helpful to the students, and definitely that will help in exams also, which you might be appearing. For some students, this may be because they might have attended my sessions earlier in some of the seminars. So from them, it may be a repeated provisions, repeated these things for them, but definitely this will be a revision for them. So coming to the provisions per se, I think presentation is available.
Yes, it is now shared.
It's available now. So basically, why returns has to be filed? First is the question. So already nearly told that return is to be filed. What the reasons? There are various reasons about that. Now, one thing that the government collects the tax by 2 or 3 ways. First is by way of advance tax. Second way is by way of TDS. And third way is by the once you pay the tax, and then finally you have to pay the tax by way of self-assessment tax. You might be aware about this. So these are the way the government taxes has to be collected by these various ways. So the government definitely has some targets for the targets for the payment collections of the taxes. And you see the government every quarterly the targets, these figures are being released. So this year, if you see the financial target has increased by 16.97%, and first quarter revised estimated exceeded by 0.69%. So these are basically the statistical data released by the government. And before filing the return of income, you have to go with the government's charter, which has been released in 2014. And this is the first government which came up with this income taxpayers charter, which has been divided into 2 parts. That is, if you see this taxpayers charter, which has been released, that says that what is the duty of the taxpayer and what is the duty of the income tax department. So this you have to first and the foremost thing is that whenever you file the return of income, you have to give this charter to the SSC, that is basically the taxpayer. So what is his duty and what is the duty of the income tax department? The taxpayer income tax department says that the government says the income tax department is committed to give certain type of services to the SSC. That is, whenever you file the return of income or whenever you visit to any income tax department's website, they have a department has to give certain type of services to the SSC because they collect the taxes on behalf of the government. And this intermediary, because the services, the taxes which has been collected by the income tax department is through the web portal, and that is through the third party web services which has been given. They have given this. They have basically what they have done. They have appointed a third party agency who does this work for the government of India. So that is first and the foremost thing. So there is an intermediary which is there, which does the services for the government of India. So if you are not satisfied with the services which they are giving it, so you have the right to complain about the services to the government of India. And for that purpose, what is the services which a person has to give and what the services person has to get from the income tax department. So first, and the department shall provide prompt, courteous, and the professional assistance in all dealing to the taxpayer. So that is the first commitment which the government has given. The government is committed. Second thing is taxpayer has to be treated as honest. This is the second commitment. Now you see, this is what the government says, that taxpayer is to be treated as honest. And whatever the information which the government is that taxpayer is giving it, that is to be, it is honest. Taxpayer has given the information is honestly given. Now you see how this is been treated. You see that in the last 4 to 5 years, this has been slowly and gradually accepted. Whatever information you give to the web portal is been processed based on the information you have given. Once you give this information correctly and whatever it matches with the details which has been given, the government processes it, and if it is exactly matches with what is the government does not harass any of the excesses. In the last 4 to 5 years, if you have seen this has been processed here. So this commitment is slowly and gradually accepted by the department. Then, if you are not happy with this, you have the right to appeal to the higher authorities. But you have to provide accurate and the correct information, provide timely, you have to take the timely decisions, and pay the correct amount of tax. After this also, the government will respect the privacy of the taxpayer. The taxpayer's privacy has to be respected. Whatever the information you give to the government has to maintain the confidentiality of the information, and If you provide this information through the third party will be held accountable for that. So that is also the right. So whenever any information you are providing and you are taking the services of the third party is also responsible. So even if you are giving this information to third party, or if the returns as an intermediary you are providing, even if you are either you are an advocate, either you are a chartered accountant, or you are in third person, any information which comes to you, you are also being made accountable now in the new system. So you have to be very specific, you have to be very particular that when you are handling the information of any third person, you have to be very particular that you don't provide any inaccurate information, incorrect information. If the third party gives you, if your SSC provides you any inaccurate or any incorrect information, then you are not required that you don't accept any incorrect information and upload on the system. Otherwise, you also will be made accountable for providing inaccurate information. So this is the responsibility of the person who is providing the information on the web portal. Because under the Information Technology Act, that is IT Act 2020, you are also responsible if you provide the inaccurate information. Then any mechanism, that is basically any inaccurate any information, if you are not satisfied, then you can lodge the complaint against this. But the departments will provide a fair and impartial system to resolve any issues related to the tax in a time-bound manner. This was whenever you lodge any complaint or any issues related to this, then within the time-bound manner, they are required to resolve the issues. And for that purpose, the government has come with a various type of services, various type of portal issue, any portal related issues, you can lodge the complaints to various mechanism which has been lodged by the government. So basically, the purpose of the government is to reduce the cost of compliance and bring the effectiveness in the legislation system. This is the first part of the tax charter. Second is it expects the taxpayers also again that they have to disclose full information and fulfill the compliance obligations, that to be within the time. And whatever the information which the government does will be passed on to the taxpayer, and with even if the authorized representative also does anything on the web portal through the electronic media or through the SMS or through various other communication modes, the information is being passed on to the SSC. So it requires that whenever there is a change in any communication mode, we are required to update the data on the portal or through on the portal, and accordingly the information can be passed on to the taxpayer sufficiently within the reasonable time, so that the taxpayer is also aware that what is going on his PAN number. And whatever the notices which are being issued to the SSC is required to make the submissions within the available time, within the due dates which has been given, so that the compliances can be done by him. The compliance can be done within the responsible timeline, and the taxpayer is also required to pay the exact amount due as per the law in the timely manner. So this is basically what the tax charter says. The total number of registered payers, this is the statistical data that as on date, there are almost around 11 crore taxpayer, the individual registers who are registered on the ITD portal, out of which 9 crore 70 lakh people are registered linked with the Aadhaar. So a balance which people are there, their PAN have been already deactivated, so they have to activate their PAN. Get the PAN activated. Otherwise, what will happen now if the PAN are deactivated? What will happen to them? Anybody can say that? What will now? What has to be done for them? How they have to get this PAN activated? We'll come to that. So these people's PAN have been got because last date was 30th of June. Before that, the Aadhaar PAN had to be activated by linking the Aadhaar. So this is the returns filer status which has been released on the which is available on the ITD portal. So this last year in financial year 2021, 7 crores 38 lakhs people had filed the returns. In 21-22, 7 crores 30 lakhs people had filed the return, and in financial year 22-23, 7.78 crores return and people had filed the returns. So if you see the gap which is there, out of 11 crore returns registered people, 7 crore 78 lakhs people have filed the return. And this year government is expecting that almost around out of 11 crore registered, almost around 9 crore people will be filing the return of income this year. And till date, almost around 2,50,000, 2 crore 50 lakhs returns has been filed till date, and the people have been filing one. So almost around 1 crore return till will be filed till 31st of July. That is expected. Till more. So 3.5 crore returns will be coming. So 1 crore returns will be filed in this last 11 days. So how will this website will be working? You think it over. And almost around every hour 10 lakhs, 10 to 15 lakhs returns are being filed on the last days. How the website is going to work on the last days, God only knows. So be very particular and don't file the returns on the, see that your works get completed faster. And these are the people who reported the income within the range of the, within this range. These figures are across the country. And if you see this, almost around the people who have filed the returns below 5 lakhs, that is 4 crores 97 lakhs 81,723. Out of 7 lakhs, 7 crores return, 65% people have reported income below 5 lakhs. So how much government has got the tax? If you see above below 5 lakhs rupees, government doesn't get any tax out of it, because below 5 lakhs there is no tax. Government does not get any amount of tax. So government is not getting hardly some amount of tax out of this. And you say above 1 crore rupees, only 1,69,890 people have disclosed the income above rupees 1 crore during the financial year 22-23. Is these figures are correct? Correctly, if you see this, are these figures just means digestible figures? So this is the fate of the income tax returns. The growth, this is the growth of the processing returns, processing growth. So almost around the growth as the processing of the returns is much faster. Now we are not wasting much of the time in this. Now how to get this PAN which has been deactivated? How to get this activated? Suppose if your PAN has been deactivated because you are an NRI, because NRI people are not required to link the PAN with the Aadhaar. Suppose if the PAN has been deactivated because of you are an NRI, if the SSC is an NRI, then you have to send this, just note down this email ID. This presentation will be shared with you on the email ID. So if this email ID has been given, that is adg1.systems@incometax.gov.in and jdsystems1.1@incometax.gov.in. And on this email ID, if the PAN is deactivated because of non-linking of PAN and the SSC is an NRI, then you need to send a colored copy of the PAN. Along with that, you have to send a proof of residence which shows that a person is a non-resident. That is, he is a non-resident. There is a passport copy showing a period of residence outside India on the email. And generally within the 24 hours, this PAN will be activated by the income tax department. And one thing is that even if the PAN is deactivated, because of this, you can file the return of income, but your refund will be kept on hold till the PAN becomes activated. Only the thing is that refund will be on hold. So this is only the disadvantage of this, but returns can be filed. This is what the press release of the government is. Now coming to the provisions related, just have a brush up the knowledge of the returns of income. Now what this sections 1, there are certain section 139 deals with the provisions of the returns of income. 139(1) says that you have to file your returns within the due dates. Due dates everybody is aware, right? That 31st July, if you have if you are not liable to do or for audit within 139(1), you have to file the returns on or before the due date, which is specified under the Act. So 139(1). Now suppose 139(1), if you have not filed the return of income, then you can file it after the due date. Also you can file the return, but you can file it before 31st of December. That is with a specified late fee. That is also permitted, but with the late fee. So late fee also is there. That is 1,000, 5,000, 10,000, which is there based on the income which is there. What you report the income, then you have to pay the interest also for if the tax is due, and the section 234 ABC, you have to pay the interest also on that. But there are certain restrictions for filing the returns after the due date, because if you don't file the returns within that specified time, then losses may not be available, or the certain deductions which are related to the chapter, the deductions which relate to the income, they may not be available. That you have to go through the provisions. What are the provisions are there? One thing here, it should be noted that when you file your return on income, you have to get these returns e-verified. And the time limit for e-verification earlier was 120 days. But now the time limit has been reduced to 30 days. So if you don't e-verify your returns within that specified time limit of 30 days, then your returns will not be accepted on the system and it will be removed from the system. It will be treated as returns which has not been filed. The reminders come before the due dates that you need to e-verify it. Just don't ignore the messages which comes from them. If such messages comes from them, just verify whether your return has been e-verified, got e-verified or not. If such messages comes from the department, even if your return is e-verified, just download it, just send the acknowledgement and just send a message to them that our return is e-verified and we are getting the messages from the department that your return is not verified. It may be such that your returns may be verified, but the system may not, due to some system error, the message would have been, the returns may not be processed properly, or there may be some processing error, or some issue may be there with your PAN number. Then, in such a cases, suppose if your return has been e-verified or e-verification has been completed, but the system may have identified certain errors in your return while processing the returns, and it might have generated certain errors. So they might have, at the time of processing the return, the return would have been thrown from the system while processing. Some technical error or some technical glitches would have happened at that time while processing the return. So system will generate one notice that they are unable to process your return due to some technical issues relating to certain clauses which you have filled up in the return of income. They will ask you that there are certain glitches in your certain clauses which you have filled up. Kindly rectify the clauses and you upload the return again, or they will ask for certain clarification that return will be kept on hold for 15 days. And you are required to comply with that requirements. A 15 days time limit will be given to you. If you don't reply to that time limit, then your return will be again removed from the system. So that return filing will be treated as 139 return filed under section 139(9). So this also, when these notices come, you don't ignore these notices also. So this, after this all procedures, you need to complete the e-verification. Without completing the e-verification, your returns will not be accepted on the system. So these are basically related to the provisions of income tax. Second thing, if you say that I don't have any taxable income, I don't have to do it, then also I don't want to file the return of income. But there are other provisions also in the income tax return that you have done certain activities or you have done certain transactions, then you also, despite of doing certain transactions, despite of not having the taxable income, you are required to file the return of income. Basically, because you have spent certain, you have spent certain items, means certain expenses, as you have done for you have traveled from the foreign country and spent certain amount of foreign travel expenses, your electricity bills expenditure exceeding ₹1 lakh, or credit card spendings, or certain bank transactions exceeding ₹1 crore, and you don't have any taxable income, or you have a loss, then also, despite of not having a taxable income, you are required to file the return of income. That is covered by section 139(3). That type of transactions are covered by section 139. Then also you are required to file the return of income. If such transactions are there, then also the notice may come in future, but you are required to file the return of income. So these basically are there. After completing all these procedures, also you forgot to file the return. Then there is one updated return also is available. Option is available for updated return that will be covered in the next few slides. Now we have filed the return of income. Happy, your return is filed, everything is done, you are completed. After filing the return, also I file my return of income. Now my things are over. I have forgot something. Now some income has come. I want to revise my return. Now I have to add certain income. For adding certain income, you can, after filing the return of income, also you can revise the return of income. There is a provision to revise the return of income to rectify your mistakes. That return will be treated as return filed under section 139. But what it can be done? It can be filed before completion of assessment or before the end of the relevant assessment year, whichever is earlier. But now this before the end of the relevant assessment year is reduced to 31st of December, because that now it is 9 months from the 9 months. Even the return which has been filed after the due date can also be revised. But there are certain restrictions for this revision of the filing of revised return. You can only disclose the additional income, but you cannot reduce the income which you have already disclosed, or you cannot disclose increase the loss which is already there in the original return. But extraordinary income, if you have disclosed it, suppose in the original return you have disclosed 2 lakh rupees and now you want to disclose 10 lakhs rupees. For example, just haphazardly figure I am telling you, then there can be a concealment penalty, because now you have to try to save the tax and all, you have disclosed some haphazardly amount, exorbitant amount you have disclosed it, then there can be a concealment penalty also in certain cases. And to file this revised return also, your tax has to be paid before filing the return of income. And suppose in case now you have disclosed the income of, suppose 1 crore income is disclosed, and suddenly tomorrow after filing the return there is a search or survey is there in your place. Now because the person has come, search and survey has come, and he has found that you have the SSA has found out now that there is a 10 crore undisclosed income is there. So he wants to file the revised return and pay the tax. So in such case, also the revised return cannot be filed. So this is there are certain restrictions for that. So basically this is related to revised return. Then this one updated return was introduced. Now the time limit for this filing the return is now 31st of December. So after 31st December, you cannot file the return of income. 31st December is the last day. After that, no returns can be filed. So this is done. Earlier the provisions were that up to 2 years you will be able to file the return, but now after 31st December, you will not be able to file the return of income for the financial year 22-23. 31st December 23 is the last date. After 31st, suppose now the 31st, after 31st December 23, one wants to file the return of income. After 31st December 23, one wants to file the return of income. Then what is the provision available for him? Then he can go for this updated return. For updated return, section 139(8) deals with the updated return, which provision started from 1st April 22 onwards. This return can be filed within a period of 2 years from the end of the relevant assessment year. So in this assessment year, that is fine, this assessment year, we have assessment year 23-24 is there. So we can file for the last 2 assessment years, 22-23 and 22-23 and 21-22. 2 years we can file it. We are in the assessment year 23-24, right? 23-24 we can file it normally. So up to prior to 2 years we can file it. But what it says that option of updated return can be filed only once for one assessment year. So any assessor who wants to file it, you can file it once only. You can file it. This option is available once. And it says that suppose who person who has already filed it, they want to file it again, the original return which has been filed, that also can be revised by filing updated return. But what the option is, says that you can report the additional income, but cannot reduce whatever is disclosed in the earlier return. Suppose if you have filed the 10 lakhs rupees return is there, and now if you want to file the new return, you can file it for 12 lakhs. You cannot file it for, can reduce the 8 lakhs. You cannot increase the loss. So suppose if you have reported a loss of 10 lakhs rupees and now you want to increase the loss to 12 lakhs, you cannot do it. So that is restricted. So if the return is filed within that period of 12 months, then you have to pay the regular tax plus interest plus 25% of the additional tax, and after the period of 1 year you have to pay 50% of the tax, regular tax plus 50% of the additional tax, and tax has to be paid again before the filing of return of income and has to be submitted submitted before the filing of the return. E-verification has to be completed. Without e-verification completion, your return will not be accepted on the system. E-verification is mandatory. That thing has to be remembered on the portal. Immediately, again, also the returns cannot be filed in search and seizure cases. So search and seizure procedure is totally separate, is not linked with section 139 provision. There are another provisions are there. Okay. So this is basically related to income tax provision. Now coming to the how to e-verify the returns. This e-verification of returns, there are separate provisions. There are various alternative provisions which are available. That is, you can do to net banking, but your bank account has to be linked with the PAN. Now all bank accounts are linked with the PAN. There is without PAN you cannot open the bank account. That is, no option is available. But only the thing is that some small cooperative banks are there. This facility is not available to them because they are using the other banks. You can pre-validate your bank with the ITD portal and your cell number has to be registered. You can do through Demat account. You can do through registered email ID and mobile number with Aadhaar OTP. Aadhaar OTP is the best, provided your mobile number is registered with the Aadhaar. And whenever there is a change in the mobile number, you have to get this Aadhaar OTP, Aadhaar verified. One thing is there that all the old Aadhaar also card needs to be changed. This we have to be updated. So you can tell your clients that Aadhaar has to be updated. So get the mobile number changed. This mobile number updated if there is any change in the Aadhaar. So these are the best way. And I would always recommend that whenever the return has been filed, get this immediately verified so that you don't have to remember it for the long. Now there are certain categories of people who have been given exemption from e-filing. That is, super senior citizens are there who are of the individual of the 80 years or more and not having income for profit and gains of business. These people can file the return in a physical format. If they should not have income from profit and gains of business, they can file the return in physical format. They have been given exemption. Then there are another category of people who are exempted, totally exempted from it, means filing only. They are exempted from filing the return of income. There are senior citizens, individuals who are of the age of 75 years or more under section 194P of the Income Tax Act, should not have any income other than pension income and interest, and TDS has to be deducted by the notified one. So basically, what 194P section says that a person should be getting income from the pension account, where the bank in which they have a pension account, that bank will work out the TDS, deduct the TDS, and work out will do the computation of income, deduct the TDS and deposit to the government, collect the TDS and deposit to the government. So that is done. They should not have any other income other than pension and interest income. So that the bank will work out the TDS and they will pay to the government. So they are exempted from the bank. So this is the condition. So if they satisfy with this condition, then they are totally exempted from filing. Who can file these are the forms are there. That is, forms are the same which were there last year. Everybody have basically know which are the forms which are there. There are 7 forms which are to be filed. ITR 1, that is simply very simple form, very good form. Saral, Suva, Sugam, Sahaj, all the good names are being given. Filed by the residential individuals, income from salary, pension, house property, or one house property, positive income. There should not be a loss in the income from other sources. All income aggregating up to 50 lakhs, agriculture income up to 5,000. Dividend income is all there, then again should not exceed that limit. These are the who are restriction, who can file, who cannot file. So just you can go through this. ITR 2 is for individual HUF who are not eligible to file ITR 1. That's basically even resident, non-resident both can use. Now one question will come that I am eligible to file ITR 1, but I want to file ITR 2. Whether I can file it? Yes, you can file it. No, fine. You can use any ITR. ITR 1, ITR 2, if you are eligible to file ITR 1, you want to file ITR 2 or ITR 3, you can definitely file it. But only thing is that the mandatory requirement which is there in that ITR, you have to give it. That is definitely required. Then ITR 3 basically is the 1, 2, and 3 are both are the similar forms. So 1 is not applicable, 1 is applicable, 2 is applicable, 3 is applicable. 3 is the last form, which have the full information basically related to proprietary business or profession. It covers all the information for individuals and HUF having proprietary business. Basically, those who have this presumptive income, for them ITR 4 is there. That is called again restrictive income disclosure is there, again individual resident individual, resident and not ordinarily resident HUF income form only they can use it. Non-resident cannot, people cannot use this form. Presumptive income people can use this form. Individuals not holding joint property ownership in the property, no income from capital gains. These are the restrictions to them. Should not hold an indirectorship in the company. Should not have a income from more than one house property. Income should be less than 50 lakhs. So these are the restrictions. So if they have even if they have presumptive incomes and if they have this type of restrictions, that they have to shift it to ITR 3. Then ITR 5 is for partnership firms. Individual and HUF cannot use this form. That is company, and those who are claiming exemption under section 11, they cannot use. ITR 6 is for companies other than claiming exemption under section 11. Then ITR 7 is basically those who are claiming exemption under section 11, either it may be a child company, either it may be a firm, etc. Political parties, those who are claiming deductions under this 190, 39, 4A, 4B and all. Basically non-profitable organizations, for them it is there. So basically these are there because this has to be compulsorily filed with the digital signature, and political party now many, I think 300 parties digital registrations have been cancelled this year, last year. So very specifically you have to be careful while filing this returns, especially those who are working for the political parties filing returns. And those who are claiming the deductions, especially for ATG, they have to see that they have to give this donation exemption receipt number also over there, which have been uploaded. So these details are to be given.
So we have a question.
Yeah, 1 minute. Dividend income can be reported in the ITR 1. Yeah, definitely. Why not? Yes, it can be reported. Then this year one thing was that the government had planned to come with a single universal return, that is single form covering all, but now that has been kept on hold. So that old ITR still continues. It's similar returns have been continued. So that has been no significant changes are there in the forms. Then this year you have to be very particular and very careful, because next year you have to select, because old tax regime and new tax regime is going to be there. So start planning from this year whether the client will be eligible for old tax regime or new tax regime, because what is there now, that in ITR 3 and ITR 4 a new it has been, a clause has been added to determine whether the taxpayer has opted out of the new tax regime in the previous years. So this has been added. So while selecting this, you have to be very particular. So because when in the business income, if you are opted out of that new tax regime, then this you cannot come back in the old tax regime. And there is a new form which has come out for opting out. Earlier you had a single form, but now you have a separate form which has been come. So if you have opted out from the old tax regime to the new tax regime to the old tax regime, then again you cannot come back, because this is, you have to be very careful. Then in balance sheet reporting, there is a slight change in the ITR forms, because in this loans and advances given and unsecured loans which has been taken, that is loans which you take it from the related parties, that you have to give it separately. That is 48 to be parties. So these minor changes are there in reporting. So breakup has to be given, that if you have taken loans from related parties and you have given the loan to the related parties, earlier you had to report in the additional column, but now it has been to be reported in the main balance sheet. So this is there. So if you see the balance sheet reporting, the rupee loans, this from persons specified in the section 48 of this is the, so has to be given separately. Earlier it was in the additional item was there, but now it has come in the main item. So this is the biggest change. Then about those who are having income from this salary and income from other sources, that is you are claiming deductions, that is relief which you are claiming under section 89, that is about the disclosure we have claimed in the any earlier years. Basically, when you claim the reliefs about in salary, you are entitled to relief from if you get a salary for earlier assessment, earlier years, earlier, and you claim the relief, and then retirement benefits maintained in the retirement benefits about other countries are taxable in the previous year relief. Previous year you have claimed any relief, and current year you have claimed relief, because basically gratuity, gratuity is there, and leave encashment is there. You are entitled to certain number maximum limit or limit, and in the earlier year, suppose if you have claimed certain amount of it, suppose the gratuity limit is 3 lakhs rupees. For them, giving just example, the gratuity limit is 10 lakhs rupees, and you have utilized out of that 5 lakhs is already utilized, and the balance only 5 lakhs is available. So what you have utilized in the earlier year, that amount here has to be given. So balance only it will be available to you if you are claiming the relief over here. So that this has been added over here in the ITR. So this is basically in all the ITR forms. Then about the virtual cryptocurrency, this is given in section 115 BHS, double BH is there, is added in all ITR forms again. That is the separate schedule is there, schedule VDA has been added. So the profits from virtual digital or cryptocurrency has to be reported under this schedule. So if SSC, basically if it is treating a virtual digital asset as a capital gains, then a quarterly breakup has to be given. It is just like you're giving it in shares and securities or dividends, etc. So basically, accordingly, your working will change for the advanced tax purpose. And every transaction of VDA has to be reported along with the dates for sales and purchase. This is mandatory in reporting in the schedule. So again, it is that loss is not allowable. You only a profit will be taxed and loss cannot be adjusted. This is what it says in the Act says that loss is not allowable. So this basically is the new schedule, and it is applicable to all the forms. Can a person having income F&O opt for 4480? Yes, definitely it can opt. It can opt for it. Few transactions of intraday share market and gains loss ITR 2 or ITR 3. ITR 3 will come. Then see, this is the schedule VDA which has been added. So in that you have to give date of acquisition, date of transfer. All this you have to give full details is there. So when you fill up this detail, automatically only positive income will be selected. So if business profit is there, it will go in business profit, that is scheduled BP, and if it is capital gains, it will go in capital gains. Then there's now this payment of tax has been shifted to the new new portal. That is now you can have to pay the tax from the income tax portal only. Earlier you had to pay from the team portal. Now we have to pay it from the income tax portal. One big advantage is here it is earlier you had to wait for 72 hours to get the credit for the tax payment. But now if you pay the tax immediately within 2 to 3 minutes, you get the credits for the taxes paid. So you don't have to wait for the taxes. So why have tax? So once you pay the tax, immediately you will get the credit for the tax. So these are the new banks which are, even the private banks, you can pay the tax and you can get the credits for the tax. Even if you see this cooperative banks also have been added. The City Union Bank also has been added to pay the tax. So these are the list of the banks which have been enabled for the payment of agent. One thing is that, so when you are paying the taxes, you have to see that when the banks have been migrated in this new portal, the BSR codes of the branches have been changed. So please be very careful that while putting the BSR code, if you are putting it manually. Because generally what happens, there is a habit of selecting the code which you, because when you're putting the BSR code manually, you might be using the HDFC Bank commonly, so you might be using your code number, which is remembered since last so many years. So these codes have been used, remembered since last so many years. So you might be putting it the remembered code. But now since it has been migrated in the new portal, the codes has been changed. So just don't put that new old codes. You might not get the credits for the taxes paid. Then about this ITR 5, about this deemed capital gains. That is basically when there is a demerger or any partner retires from a partnership firm and any capital asset has been distributed to the partners, then the partnership firm is liable to pay the capital gains on the distributed asset. This provision was inserted in the last Finance Act. So this clause has been added in ITR 5 because partnership firm has to pay the tax, and the cost of acquisition or the cost of indexation will be given as a deduction. So this has been added in the ITR 5 under the capital gains schedule. So any firm AOP or form of the AOP or local this is there. Any sale or transfer or dissolution takes place and any asset is distributed to the partner, outgoing partner, then what will be the fair market value of the asset on the date of transfer will be taken as a deemed to be the full value of the consideration received or accruing on the date of the transfer under section 45(4). So that has to be taken and the reduction will be given for under section 48(3) and the balance will be treated as a capital gains and the tax has to be paid. Though the firm may not have been received actual amount, but that will be a deemed capital gains and the firm has to pay the tax on that. So this provision has to be remembered and this is the provision and tax has to be paid. Then intraday, about this one question that come right now, but the intraday tax trading, the turnover figure and the profit and income from these both figures has to be reported now here separately. And if the person is the SSE who is a foreign institutional investor, then the SEBI registration number has to be given if he is there, so that is disclosure has to be made. Then for the cooperative societies, there are certain other provisions changes are that if it is located in the IFSC, then the AMT is applicable at the rate of 15%, not 18.5%. Option to disclose the taxes under this 115 BBIA is 30% for the trust. Then 112 capital gains surcharge is restricted to 15%. That is basically if your income is exceeding 1 crore rupees, then the surcharge is exceeding rupees 15% only, no restriction on the slab. In case of members of the AOP or companies, then surcharge is also restricted to 15%. This is the provisions changes in the Finance Act. So when you are preparing the competition income, just take care of these provisions, remember these provisions. Then certain notification relating to ITR filings, it will be helpful to you. That is last date of linking of PAN has been extended, last was 30th of June. Form number 10 has been enabled for filing, that is trust related registrations for charitable trust, and these donations which the trust are accepting, they are required to file 10 number form, issue this form 10B and 10BD, etc. The due date has been was extended, so they had to give it, and the registration date is extended to 30th September. So all this trust basically, which are having the provisional registrations, they should get the final registration. So without these registrations, they will not be able to give these certificates, 10B and 10BD, etc. So get this done. ITR 1 to 5 is available now. ITR 1 to 5 and 7 is also there. So Excel based utilities have come, JSON based utilities, not only ITR 6 is remaining. So this is basically, this presentation is there's a mistake in this presentation. So ITR 1 to except 6 is pending. Then one strict warning has been given to the private software providers, because this basically what the statistical information says, that almost around 85 to 90% people have started using the private software. And while processing the return of income, department has seen that most of the errors which has come up is due to the private software providers. And each of the private software providers are being given the codes to verify the returns, because they have seen that private software providers who have been given the codes, they have identified the while processing the mistakes, that is 139.9 notices have been issued because of them. There is a processing error because they don't provide the required, the software utilities they are providing it. They are not giving the required information correctly. And the demands are being generated or the errors are being generated. So they have come up with a circular on, they on May 23, that the software providers are strictly advised to adhere to these rules. That is, if they are validation utilities, that if you don't adhere to the validation utilities, then their licenses will be cancelled and they won't be allowed to give the give the validation is file. They will not be allowed to fire. They will not give the licenses to them to create the utilities, because they, unless and until they use the codes which have been given to them, the validation software. How this now I'll tell you. I explain to you, because they have to they write the software. Private software people write the software, and for the validation they have to approach to the income tax department. And income tax department gives them the validation utility, and on that validation utility they have to run this software. Then only the e-filing happens, otherwise they don't happen. Now what happens, they when they create the software, they modify the validation utility and they generate the filing software and they try to upload it. So this type of this type of things were happening, and so the department has come with this circular. Now what has to be done about this do's and don'ts with the ITR? Coming, I'll take 3 questions, then I'll come to this. Can a person having this, I think we have done, no? How to compute turnover in case of intraday trading? Intraday trading basically is the difference between the sales and purchases of turnover. If dividend income has been earned from USA stocks, what would be the tax treatment and how to distribute? Dividend will be treated as dividend only, and whatever the tax you have paid over there, you will tax, whatever you have paid there, it is treated as income from special cases, and 15% is the tax as per the provisions of the. I think you have to income from special income. There is a special income is there, provision is there. You just go through this provision. I think 15% tax is there. If self-resident tax are paid, it appears in AIS only after submission of ITR 5. In case ITR 5 submitted by post. I think, see, I always advise don't send all this by post. Do verify it by online. And if it is by after post, then you just file again submit the revised return. That will be better and get this issue resolved. And try to file your return with this other OTP or by through net banking, so that that your returns get processed faster. And even department has also insisted to get this e-verify done through other OTP. Now coming to do's and don'ts. So before filing the return, first you have to see that first your profile verification and confirmation is mandatory. So get your profile verification done before filing the return and confirm that whatever the status or other details which are there in the profile are validated correctly. So this is the first step. Whenever there is a change in the profile, get this profile change verified. Then review of the previous year returns, income tax returns and in confirmations. That is, first of all, you have to see what is the previous year's returns income. That will be helpful to you. You have to compare your previous tax returns and current year's return, so you will get the rough idea about what your information is there. So this will be definitely help you in finding out if there is any variance in there. So if your income in the previous year and the current year, if there is any mismatch or what is left out, this will help you as a guide. Then what are the tax deductions which you have claimed in the current previous year and what the deductions you are claiming in the current year, whether this is matches or not. So if there are any deductions which you have claimed in the current year, or the previous year which has been claimed and it is not claimed in the current year, then it will help you out to verify it. before uploading the computation of income, you have to verify it correctly whether all the incomes which is there has been correctly taken or not. And for this purpose, you have to study the information, that you have to know the provisions of the act, study the intimations of the previous year, because if any carry forward losses are there, that claim of the losses has been taken. If you have claimed the losses in the returns of income, whether in the intimations which you have received, whether in that intimations the losses has been allowed to you or not. If the losses have not been allowed in the intimations, and definitely while the processing the return of income, the losses will not be allowed to you. Then the information which is there in the AIS or TIS have been reported incorrectly in the ITR, because that is the main source. Now from all the area, the information is being taken by or collected by the AIS. That has to be correctly noted. Then about reporting of the financial statements. Before filling up the file, because whatever the financial statement which has been prepared, that has to be correctly reported in the ITR. Because that will be, at the time there is a scrutiny or the income tax assessment, there you have to submit the financial statements. And all these documents which are submitting in the ITR, that has to be duly signed by the SSC. Certified and signed by the SSC before submitting in the ITR. And I would always recommend that you take the declaration or you take an management representation from the SSC before submitting it in the ITR. If there is any ICDS compliances, then definitely work out the ICDS compliance also, depreciation working, MAT working, and if there is a business income, first you verify whether the 44AD and 44ADA provisions are applicable or not. If 44AD and 44ADA provisions are there, then accordingly you report the income and work out it. Then if any these claims related to the foreign tax credits are being claimed, then you have to file form number 67, which is mandatory before uploading the ITR. If you fail to upload form 67, the form credit, their correct tax credits for foreign tax credit will not be given. Then if your income is above rupees 50 lakhs, then schedule FLA has to be filled up. That is this schedule AL has to be filled up, disclosing your assets and liabilities. If the SSC is a resident, then he is having any foreign interest, either by way of asset or as a signatory, then schedule FLA has to be filled up. If he is holding any shares in unlisted company, he is a director in any company, then these details about DIN number, holding in unlisted shares, details has to be given. Method of accounting selection is most important. Generally what happens when the software is being used, automatically the mercantile system of accounting, generally all softwares automatically select. So see that the software system method is being selected correctly or not. So there should not be any change in the method of accounting in every year. Because if there is any change, automatically is that, because on the last days what happened, everything goes in the automatic mode and the filings are being done. And again, during the time of assessment, this type of errors do happen. Direct balance sheet reflection, the returns which has been filed has to be correctly seen. MSME interest disallowed, because any interest which has been paid to MSME is disallowed and cannot be claimed as an expenses. Because generally these type of mistakes do happen in the return of income, and these are all such small things which has been identified from these daily practices. New portals, basically because of this new portal, can I use FN laws of capital gains and for no, that is not there. FN laws cannot be inserted. Whether form 10 IEA is required to be filed from 24 or 25. If you want to set change it in the whenever you want to go to the change the system, basically it is for the business income, business assessment it will come. If you are opting it for the change in the current year, for the business income, you have to file it in the current year. In case of any mismatch between AIS and I am coming to this question in the next presentation. Next slides. New portal is an interface for the CA and other agencies, because this new portal has come up for certain other reasons, because now it collects, it is a single window which interacts with all of the softwares and has created a interface with all the agencies to create a this is the new portal. Everybody is aware what is there. Now, what is there are restrictions with the new portal? Suppose if you want to log in on the IT portal, it is given an option to log in with Aadhaar OTP also to misuse. This option is available. So you can log in with the Aadhaar OTP also. If you put incorrect PAN, incorrect password for more than 3 times, it locks your this for 24 hours. So 24 hours. So please be very careful. Don't try to use it on the last days, because otherwise your PAN will get locked for 24 hours. You will not be able to file the returns on the last days. Now, expanding capturing it gives you the pre-filled utility also. So those who are not using the software and want to use this facility, then use this file for filing the return of income. So you can download this pre-filled utility, and you can download the return filing utility from the income tax portal, and through this information you can upload the return also by basically 26 AS and other information which are there on the AIS. TIS can be, you can get it from the prefill through the prefill option, and you can upload the return. So this option is available. Validation of bank account is mandatory before filing of return to get the refund. So you have to, so what you do is that before filing of return, you see that your bank account is validated. So if your bank account is validated, then your refund will come to that account without any delay. And generally what happens is this year some delay refund is going to get delayed, because it is going to verify with some other details and all, but definitely says, but if your details matches with your AIS and AIR, then it will not take much time, but definitely it will be clear. But only the thing is that bank validation with the private bank is not going to happen. It is some small banks like small cooperative banks which don't have a direct IFSC facilities. If they don't have such facility, then these type of banks will not get pre-validated. You will have to get this account open with either private banks or with the nationalized banks. Then only it will get validated, otherwise not. So you have to be very careful. And even if your old pending refunds are there, if it is now it has not come to your bank account, you get the bank account with the this validated in the new bank account, it will come to that account. The biggest advantage of the new portal is the real-time processing of the returns. Once you file the returns, last year we have seen that if after filing of the returns, immediately the refund was come. In 10-15 minutes, many people have got the refund also. So this is the biggest advantage of the new returns. Challenges are definitely there, because profile updation is taking generally a big time. You have to, once you put the profile updation, then it goes via email OTP will come, then mobile OTP will come, then only it will get updated. So this is the biggest password reset again is a big challenge, because once you go for password reset, again it has to go through a number of channels, then only it is permanent. Then don't try to reset the password on the last day, because there will be a load on the website. Then digital signature, again the biggest challenge about the EM signer. Every time there is a change in the EM signer utility, you have to update the EM signer utility. And anybody who is facing any problem on the EM signer, basically then they can just refer to my small video about the EM signer, which is there on my YouTube video. You can just refer to that, and any issue related to EM signer, you can get it resolved. Then about filing of forms and approval. Again, this is system, because earlier what was happening is that you can download the form and you can fill it up and you can upload it. But here that option is not available. You have to fill up the form, upload, be on the online only. You have to fill up the form and then you have to upload it. a digital signature has to be there on the system, that is, it has to be affixed on the system. And otherwise, without digital signature, approval cannot happen. It has to be, token has to be fixed over there in the on the system. Earlier, what was happening in the old portal, that the utility was generated and the signature which was lying with the client or any other person, third person, he used to sign it and create a PFX file and send it to you. So that is not that is not there. Now here the signature has to be there on the system. So this is the biggest disadvantage. Bank account validation is mandatory. So if the bank account is not validated, you don't get the refund. Then pre-filled utility and 26 AS verification confirmation. Again, many of the entries are not having in 26 AS. And some of the entries which are there in pre-filled utilities are pre-filled utilities also not big, so great, which is called to be so called. Many entries which are there in 26 AS are not being automatically coming in the pre-filled utility, or AIS, TIS information is also a big challenge which is there in the pre-filled utility. Website issues is again a greatest concern. Websites are not working, has started many problems also. But I was just going through 2 or 3 messages have come to me that website is not working right now. Then software updation, definitely you have to update your software, because it requires that this requirement, without this requirement, your software is not going to work. So for desktop browser, minimum this is the requirement. Without this Windows operating 7, you cannot work it. These are the software valid class 2 or class 3 signature is required. So this much minimum software requirement should be there. Without this, and second thing is that sometime on some portal it is not working, sometime on some machine it is not working, and if the website is not working, and similarly, generally you will have to work 24/7 on the last days to file the returns of income. So basically, this is related to the income tax portal. Coming to the annual information statements and all. Anybody, any questions related till this, you can take it up there, or otherwise I will move to the AIS. AIS will take 15-20 minutes, and if you want, we can take a question answer later on, because annual information in 20 minutes we can complete. So CBDT, while 28 May had released this annual information statement, this was first time in 2020 the notification had come, and earlier it is through compliance portal it has been placed, and now this basically this AIS has been divided into 2 parts, that is basically part A and part B. So earlier we had 26 AS only, but now we had a new 26 AS has been converted into AIS. And part A says that permanent account number, Aadhaar number, name, date of birth, incorporation, formation, mobile number, email address, and address. Now what it says that part A, permanent account number is a PAN number, and after PAN number, Aadhaar number is there. So if your Aadhaar number is linked to PAN number, then only it will come over here. So this is first thing, that if your Aadhaar number is not there, you have to link your Aadhaar number. Second, your date of birth, which you have provided, a date of birth or incorporation number, date of formation, mobile number. So if your mobile number is presently, if your mobile number which you are using it is not the same, you have to get this things changed, email address and address. If anything related to part A you require to be changed, required change, then you have to file it through, you have to get this updated through by filing form number 49A online or through Team Facilitation Center. So this is always mandatory, that whenever there is any change in this part A, you have to get this updated, because all the communications now done by the income tax department will be on this email ID and mobile number only, and there may be no physical communication. So any communication done online under the Information Technology Act, any communication sent by the income tax department online is a valid communications, and if you don't reply to this communication, it will be treated as information, or the notice is not replied and the action will be taken. The assessment may be done, the assessment may be completed, the best judgment assessment can be done by the income tax department. So you have to give this information to the assessees. Part B has been divided into seven information, that is information related to the TDS and TCS, information related to the SFT. Basically, SFT is related to the specified financial transaction, that is whatever activities a client has done, whether he has invested in shares, whether he has spent to credit cards, whether he has traveled to foreign countries, wherever any of these 42 types of transactions which are covered by SFT, dealing in shares, capital gains, purchase of property, etc., etc. So these transactions will be reflected over here. Information related to payment of taxes, basically related to advance tax, self-assessment tax will be there. Information related to demands and refunds, this is pending, that is outstanding demands related to the TDS, TCS, which is there on the income tax portal. Pending income tax proceedings, pending completed processings, and any information. So basically, this is the data of any, is what is we call it as a general kundli of the SSA. So any information which is there, so any demand which is there, refund which is there, so if any correction is required over here, you have to inform to the SSA that these things are there. So what is information here is for filing the return of income 1, 2, 3, and 4. First four things are required. First four things are important for filing the return of income. So specified financial transaction will play an important role. TDS and TCS will play an important role because this will be helpful. This will be helpful for filing the return of income. This year, because AIS has included what the new information about the interest, dividend, securities transactions, mutual fund transaction, foreign remittance information, etc. But this has happened because of this data analytic transaction, because now department has started using artificial intelligence, and based on this artificial intelligence, all the informations are being captured. When this data analyticals has been used, there may be the chances that duplication of entries may be there. Some information may be double. Some information may be by mistake has been happened, or what may happen, the department regularly processes this information, and this information is updated every 3 months. This is a real-time processing has been done. Basically, every 3 months the information is being updated. So when what it happens, when the technology is being used again and again, there are no chances that some information may be incorrect. So it says, department says that you are required to submit an online feedback if any information is incorrect. And for that purpose, they have given a AIS utility. And soon the SSC is coming, department is going to come up with a mobile application. So if a person is free, because now what has happened, the people have become very much free, that they are using mobile freely. So when any notices, anything, such type of things come, so you can, the department is coming up with a mobile application also, so that they can submit the feedback through mobile application. So AIS, the income tax department is coming up with the AIS mobile application. So any SSC relating to this feedback, they can through the AIS mobile application, so they will be able to view the AIS on the mobile, and will be able to upload the feedback also on the mobile application. So this is under development, is coming, so it will be launched soon. Now, the downloaded PDF is password protected. The password is the date of birth, PAN in the uppercase, and the date of birth. Suppose if the PAN number is this and date of birth is this, so this will be, password will be this. Your PAN number in full and the date of birth. I think there is the typing error is here. It has to be this, it will be a capital letter. The PAN number is here, so the file will open. The file will be in the PDF format. Now, how to access this AIS? Go to the income tax portal, that is incometax.gov.in, and in there AIS link is given. You have to log in with the user ID and password. Click on the proceed button, and automatically it will take you to the compliance portal. You can also log into the compliance portal, so direct link is already given. You select the relevant financial year. In that, both the AIS and TIS is given. AIS is a detailed statement, TIS is a summary. Taxpayer information system is a summary, and the AIS is a detailed statement. And it can be downloaded through download button in PDF and JSON format. If it is downloaded in a JSON format, you can convert it into Excel utility, Excel through the AIS Excel utility converter. Excel converter, utility converter is also given. And many software, those who are using the software, the software providers also have given a direct conversion utility, they can download it over there. Now, you are required to provide a feedback. Whether the information is correct, whether income is taxable, information is not correct. This function can be used to modify the details. That is, if there is a rent related detail, then you can modify the rent related details. If this information is not related to you and related to any other PAN or any other assessment year, you can mention the number of the PAN, mention the person's PAN number also over there, and that assessment year also. If the information is duplicate or is included in any other information, you can mention over there. You can also deny this information. The feedback provided by the taxpayer will be shown separately in the AIS and will be updated. Will update the value of the taxpayer information system. So it will be regularly updated. Every 3 months we will be seeing this information will be updated. So this is basically, and click the optional button in the feedback column. It will send to the add feedback screen. Select the appropriate feedback option and provide the necessary information depending, and then you have to submit it. So you have both the thing option. You can submit the feedback can be submitted, single entry feedback can be submitted, and multiple means you can club the feedback and submit the feedback, clubbing it up all the things, but that has to be through the JSON and this AIS utilities. So still, if you have downloaded the Excel utility and converted into JSON, the JSON file into Excel utility, and in that Excel JSON utility, you can submit the feedback and you can upload it. So both the way you can do it. So this is the feedback provided by the SSC will be captured in the AIS, and reported value will be modified after the feedback and will be shown separately. Then the option to value the taxpayer can download the JSON file and the offline. This we already discussed. And what will happen subsequently when you have submitted this feedback, that feedback will go to the original person who has submitted this detail, and it will cross back and cross check this. So if that person accepts this detail, according to the AIS will be updated, AIS will be updated. If that person has denied it, no, this is correct, then it will come back to you and it says that that person has denied this information, and accordingly you will be given the notice to submit your clarifications, and the assessment notice will come to you to give you the necessary information. Now coming back to the income tax return based on this AIS and TIS. Now what happens that what do you want, what can be done this? Suppose a client will come to you and say that even if this entry is appearing in 26 AIS and AIS and you file my return without considering this, what you should do? What has to be done? You tell me now. Whether you should file the return or no? No one has answered. Can file the return and be correct? Definitely correct. If it is correct, you can file, but you have to take the declaration from them. File it an objection in AIS. If your objection is taken in AIS, you can file it. Definitely you can file it, but they take a declaration from you. Fine. Then now coming to the last legs of the discussion today. Now suppose a person doesn't file the return. What happens? There are many, out of 140 crore people, 11 crores people registered on the portal, 9 crores filing the returns, 5 crores not paying the tax, single penny. Great country, no? So income tax require this finances we have section 80 AC is there, section 276 double C is there, which provides that for imprisonment up to 2 years in case the person does not file the return of income. Exemption is given if the return is furnished till the end of the assessment year. Now suppose if you don't file the return of income, if the tax is due and you don't file the return of income, even if you pay the taxes, this can be levied to 76CC can be levied if you pay. But if you say exemption is given if you file the return of income, if the tax payable is up to rupees 3,000. Suppose the liability is 1 lakh rupees, and you file the return after the due date, then 276CC can be levied. But what it says that priorly the company is there, then company cannot be exempted from this. Companies are exempted. Then certain deductions are there. Section 80C AC has been introduced to extend the disallowance, that is up to this section 80H and section 80R to section 80 RRB deductions will not be granted if the return is not filed within the time limit which is provided in the section 139. So basically, when this type of banners should be printed in the kept on the office, that if you don't file this return, these are the provisions. So you should give it to the client, send it the mail to the client, this client. Now, people go and spend this much amounts in the restaurants, this much amount there. So this, don't worry, the days are soon here, because in the next 2 or 3 years, departments are slowly started. Then this is your expenses and this is your income. Now you say, tell me from where this money has come. Your spending is this much, and from where this money has come, you show me where your income is there. So slowly and gradually things are improving. So future ahead, definitely. Now mobile app is coming to file the return of income. The taxpayer can access via the application, or full portal will be available to access on the mobile app only. A taxpayer will be able to see all the interactions on the mobile app. So tax paying payment can be done through credit card, UPI is coming, don't worry about it. Social media connect is available, is through Facebook, but don't keep on posting anything, useless things on the Twitter and Facebook. Be socially responsible. We as a chartered accountant, we as a professional, we are socially responsible person, should not do anything on this. And grievances any which are legible should be only this posted. These are the new help desk contact numbers. Any issue relating to e-filing, definitely the dedicated email IDs are there. And total issues are the e-filing web manager email ID is there. Post it to that email ID. These are the dedicated email IDs. They are there. Post it to the email ID. Now department has started coming with this type of advertisements, whether returns to be filed or not. So coming to this last, whether date extension is coming or not, whether it may come or not, but definitely now whatever this stated in this material, specifically because this is my views only, and it should not be taken at any as a legal interpretation. This was for the purpose of discussion, and specifically should not be applied to any of the client or anything, anybody, and neither the chamber nor me or anybody is responsible for this. Thank you very much for patient listening and all. I will take up the questions. Private trust with one beneficiary is income taxable, hence taxable maximum benefit once taxable maximum always or depends here. It will be always, I think my best opinion is will always be maximum marginal rate. We will get the recording of this video. Recording of this video will be available on the Chambers portal, and presentation will be there. Right now, Charmi? We will.
Yes, sir. Yes, sir.
Yes, sir.
Then there is a refund received in the bank account, but details are not reflecting in 26 years. Refund amount is reflected in AIS, but interest on refund is not bifurcated from where. See, you will be having last year's refund will be there. What the computation you have prepared it, and the computation you have prepared, and in that whatever is amount is there, and balance amount was difference, you treat it as interest only. That is the only option available, and option available. No other option is there. Or you can write intimation is not available. You can write it to the creator grievance, and you will get the intimation. Intimation has to come. There's a receipt of interest on NSC, on AIS, on maturity of NSC, but the client has already offered the income to the tax in earlier on approval basis. But there will be a mismatch. You can definitely, no issues in that. If the interest is already offered, you should not worry about it. You can just, when the query comes, you can just inform it. Not an issue. Can income received from investment made in IIFL fund be adjusted against the expenses incurred on such funds such as management fees? I think there is 6% this expenses allowed. You can now adjust it up to that amount. The maximum limit is up to allow that account. What will be the tax treatment of annuity amount received from LIC? Just to go through that provision, because in that policy it is written which type of annuity is there and what will be the taxable amount. In the policy, you have to go through the policy. Each policy has a different type of deductions and all. Read the policy and go through that policy deductions. Any questions related to this, and we can definitely take it up.
One person has raised hand in case he still has the question.
Rent income not received, but still reflecting in, so you can deny it. Definitely you can deny it if it is not received, but they see that ask to the asset whether there is any rent agreement or not, because denying is now general, everybody is denying, nothing is there. When every AIS has started, all things are all hidden things are coming out. Yesterday I got almost in one of the clients' case, I got 20 bank accounts which were never reported in the LIC annuity interest from October to paid in September 23, and then the interest is reported. If it has not been reported, October to LIC annuity interest for October to March, September 23, paid in September 23. So this will be October to September 23, paid in September. October 22 is there, or October 22? Then you have to definitely October to March, you have to report it in March. October 22 to March 22, you have to report it in March, and balance you have to report it in the next financial year. Yes, who was there? Somebody raised the hand.
Sanjay ji, you can unmute yourself and just ask a question.
No, I have not raised. Oh, by mistake, I raised the hand. Sorry.
Sir, we have a couple of questions in the Q&A box.
The salaried person signs on 25th March and his FNF happens in May when he takes his income. Basically, you have to see his form number 16. When the form number 16 has been, form number 16 will give you the idea, exact idea. Whether gift received from relative needs to be reported in the gift is not income. So not required to report. Any portal related issues, etc., will be there. You can just forward it to our chamber's email ID. We are representing it regularly. We have our representation committee, and we'll definitely report it to there. But don't report about when the extension is going to come and all, and just any legal related issues or any issues related to some. What should be the place of signing for ITR form if the client is a non-resident? Place of signing now, it is online only. No? Now there is no such place, it is there. We have to just upload it and file it from where it is there. Place of signing has gone now. Place of signing is now replaced by IP address. Any specific issue related to portal, you can just bring out that also. Let us see that if you want to represent, we can represent. We have, yeah, what is YDS? TDS, huh? In 26, but that is not our income and we do not know whose stand is. Huh? Whose stand is? How do we resolve? Don't report that income in your ITR, and you can send this you can raise this grievance in the income tax portal. There is a on the TDS portal that this income has come, and you can write it to your ITO also that this entry has come. Write to mail it or send the mail or to contact us at tdscpc.gov.in.
We have a raise of hand by Suchi Kothari. Suchi,
It is
if you
mandatory
could
to update the
yes,
profile of NRI as non-resident. Yes, yes, definitely. Otherwise, it is mandatory. Definitely, all the NRIs should update their PAN as this profile as a non-resident. Yes. Advance tax paid reflects in AIS but not in TIS. What could be the reason? Portal issues are there are some, but if you until you are getting the rate, don't worry, don't think much on it. Don't apply your mind. Apply it on filing the return of income. Do some quality work.
If the audience has any more questions, please don't ask.
Somebody has raised the hand, no?
they lowered their hand. Possibly it's already resolved.
How many people want extension? They have to eliminate. If a gift from relative is not reported as exempt, then error. Why you want to report it? It is not required. It is not an income. Why you want to report it? ITR 5 is stay on the portal. ITR 5 is already there since last, I think, 1.5 months. It is already there. ITR 6, except ITR 6, everybody, all returns are there. Online ITR 5 is available. I have not checked online ITR 5. You can verify. I think ITR utility is your utility is available. You can fill up the utility. And I would request one thing: don't file directly. And if you are using the private software, also you can just download the JSON file which is generated from the this private software. Just verify it on the income tax department's utility, and then only you upload it, because there may be errors in the utility this private software. Verify it, cross check, because every time they update it, some out of the other errors are there. Many this year also I have found 2-3 times errors have come in the private software. So don't blindly rely on that. And also don't this once your returns has been uploaded, upload it, then download the acknowledgements copy, because what is happening, the acknowledgements are getting, acknowledgements are not available on the portal. Blindly don't also rely on the income tax portal that I will download it later on. Yeah, I have seen in my case only, I got the income tax refund also last year, and now the acknowledgement is not available. I'm getting notice of not filed the return. In my case only. Since I'm having the acknowledgement, everything is available, I'm following up with them, but now they're saying that you are not filed the return. Now, definitely again, it has come on the portal, that is separate thing, but it may happen. So don't blindly rely on the system. Even if the system you have uploaded it, and today if you don't find the time today, is not there, but tomorrow morning also, if you can file it immediately, make a record and make a note that you do it on another, and make it a habit to download it. Keep a hard copy of the records.
I think that concludes our question and answer session. I would just like to give a small word of thanks. First and foremost, I'd like to extend my deepest gratitude to Avinash sir. Thank you for the time and effort you took today to come here and share your valuable insights with us. The webinar was very informative, and the presentation also made it quite easy for us to understand. Filing income taxes is a very daunting task, but I'm sure through this seminar, it has become a little easier. Additionally, I'd also like to thank our audience. Your participation and engagement has made this event very interactive and successful. Thank you once again, sir, and thank you for being an integral part of the seminar. And we hope to have the privilege of hosting you in the future. Thank you so much.
Thank you very much. Thank you, everybody. Thank you.
Sorry, sir. I think there's one more question in the chat box.
Few transactions for intraday share market loss or shares, ITR 2, ITR 3 will come for that. ITR 3. Another has come. 1 minute. Whether it is, I think last is come. No? Mandatory to update the profile. I think we have answered this. Non-resident. Done, no? Okay, thank you.
Thank you so much. Thank you so much.
Yeah.
Thank you.
Thank you.
Thank you, sir.
Yeah.